Most retail traders are using the wrong indicators. They're using things like RSI, MACD, and even indicators that claim to provide entry signals. Putting 5 different indicators on their chart until they can barely see the price action. And then they wonder why they're still losing money. Here's the truth: the big institutions, the banks, the hedge funds, they don't use any of that. They keep it simple, and today I'm going to show you exactly what they use and how you can apply it to your own trading. The answer is EMA, exponential moving averages, specifically the 50 EMA and the 200 EMA. That's it. These two lines can tell you everything you need to know about the trend direction, the momentum, and where to look for entries. And when you see how price respects these levels over and over again, you'll never go back to those cluttered indicator-heavy charts. Let me explain why these work so well. The 50 and 200 EMA are used by the biggest players in the market. Banks use them. Institutions use them. When so much money is watching the same levels, those levels become self-fulfilling. Price respects them because everyone is trading around them. This is why when you put these on your chart, you'll see price bouncing off them like clockwork. Here's how I use them. First, I look at where the 50 EMA is relative to the 200 EMA. If the 50 is above the 200, we're in an uptrend. If the 50 is below the 200, we're in a downtrend. This is simple but incredibly powerful. It tells me immediately which direction I should be looking to trade. I only take longs when the 50 is above the 200. I only take shorts when the 50 is below the 200. No exceptions. This keeps me on the right side of the market. Second, I watch for formations on the EMA. This is where the magic happens. When price pulls back in a trend and creates a W formation on the 50 EMA, that's a potential buy setup. When price rallies in a downtrend and creates an M formation on the 50 EMA, that's a potential sell setup. These patterns are clear, they're easy to spot, and they give you amazing entries with almost no drawdown. Third, I use the EMAs to understand momentum and trend strength. When the 50 and 200 are close together or crossing frequently, that tells me the market is choppy and ranging. I stay out. There's no clear trend, so there's no clear trade. But when the 50 and 200 are wide apart and sloping in the same direction, that tells me we have a strong trend. Those are the conditions where I look for entries. Compare this to those retail trader charts with RSI oversold, an MACD crossing, and stochastic doing whatever stochastic does. They're looking at all these signals that often contradict each other. One indicator says buy, while another says sell. They're confused, they take bad entries, they lose. When you use just the 50 and 200 EMA, everything becomes clear. You can actually read the chart, you can see the patterns, you can see the structure, and when a valid setup forms, it's obvious. It jumps off the screen. Now here's an important tip. Not all moving averages are useful. I've tested many different combinations over the years. The 8 and 21 EMA. Useless for what we do. Price crosses through them every few candles. There's no clear signal, no clear pattern, just noise. But the 50 and 200, price respects them. You can see clean bounces, clean patterns, clean entries. Let me tell you how this fits into my overall approach. I start with my top-down analysis. I draw my key levels and trend lines from the higher timeframes. I identify the trend direction on the monthly, weekly, and daily. Then I come down to the 15-minute chart where I take my entries. I look at my 50 and 200 EMA to confirm the trend. I wait for a formation on the 50 EMA. I check correlation across pairs. I check the news calendar. And when everything lines up, I take my entry with a strong confirmation candle. This is why my trades go straight into profit. I'm not guessing. I'm not speculating. I'm trading based on tools that the biggest players in the market are also watching. I'm trading with the trend. I'm trading at levels that matter. So here's what I want you to do. Go to your chart right now. Remove all those indicators you've been using. Put on just the 50 and the 200 EMA. Look at how price has reacted to them historically. Look for those W and M formations. You'll start to see the market in a completely different way. Until next time, good luck and good trading. This is FX220. I will be your FX220 trading expert. I drop videos like this every week. Real lessons, real strategies, no fluff. Just value you can actually use. If that sounds like something you need, hit subscribe and turn on notifications. The next video might be the one that makes everything click. If this helped you, smash that like button. Drop a comment telling me what you want me to cover next. I read every single one. I'll see you in the next video. Let's get it.